One thing that I do know in talking to especially young docs, there's so many expenses out there. Um, the cost of everything has gone up a lot. And the revenue coming in, especially if they're part providers with maybe a couple insurance plans, they might not be seeing the revenue coming in that they were. What do you say to those who say the administrative costs of these plans? Because there are, someone who implemented these plans in my practice for many years. There are definitely administrative costs involved. What do you say to people who are turned off by those administrative costs, say it's not worth it, or any strategies that they can implement to minimize some of that administrative cost burden?
Yeah. So again, it depends on the stage of life they're in, the stage of their practice. If a practice truly can't afford to contribute, then very often I say, right, no practice pension plan this year, but we're going to make sure you at least do the IRA account individually.
Mm-hmm.
So that's a solution. Let's say the practice is doing a little better, but the dentist is not in a position to put away a significant amount of money. Well, then we may recommend a SEP plan or a simple plan to them, because it gives them more flexibility. There are other plans that are more sophisticated. Those are going to be the 401ks, profit sharing plans, cash balance plans. Those are the ones that could get very expensive administratively.
Mm-hmm.
That's probably the plans they're talking about when they're saying it's going to get too expensive.
Yeah.
What I say to that is they're not expensive. Yes, you may have to write out a big check to a plan actuary to create these custom plans and then maintain them. But the tax savings associated with them are tremendous. So we already know if you're in a 50% tax bracket, you put $50,000 into a retirement account, you now defer the tax on that 50, you double the amount of money you have going forward. That we already established. But let's assume now you're later on in your practice, you're doing well, and now your financial advisor says, Doc, it's now time to contribute serious money. Let's set up a 401k, profit sharing, maybe a cash balance plan I just talked about. That could easily cost you $5,000 to set up. Could easily cost you $4,000 or $5,000 a year to maintain that plan. And I get that all the time. The doc says, I don't want to spend that money. It's crazy. Why would I spend all that money? And you know what I call that? I call that penny wise, dollar foolish. That's basically what that is.
Yep.
I'm going to give you a number of examples. And in addition to the tax deferral, which we already said is so powerful, anytime you set up a plan as an employer, any employer contribution you make, if you're an S corporation, you're not going to pay Medicare tax on it. The Medicare tax is 3.8%. So let's just assume for a minute you contributed $200,000 in employer contributions. 200,000 times 3.8%, you just saved $7,600 in Medicare tax. That's not a tax deferral. That's a permanent tax savings. You're never going to pay that Medicare tax, because that Medicare tax only applies to salary and salary that you're earning, as well as sometimes profit, depending on how you're set up. And then in your retirement years, when you pull the money out of a retirement account, that Medicare tax is not applicable to retirement distributions down the road. So my simple point is just the Medicare tax savings alone with a $200,000 contribution will permanently save you $7,600. That in and of itself, under a sub-S corporation setup, will more than pay for those administrative costs. So net, that item by itself puts you ahead of the game without everything else we already talked about. So that I've been preaching now for well over a decade. It's probably the last 15 years or so that I've been preaching, this is something you need to do.